This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil with Rabil Stock Research. I'm going to give you an update of the stock market using technical analysis in multiple timeframes. I'm going to look at both trend and momentum in 4 different timeframes. So I want to look at both the price with its moving averages along with MACD and ADX. And we're going to decipher kind of where we are right now and which timeframes to be focused in on based on what's taking place right now. One of the market conditions has shown improvement this week for the first time in a while. So I think that's an encouraging sign, but let's go ahead and delve into this. Now, just so you know, if you like some of these techniques, I would suggest starting with the book I'm offering at a discount. You can go to rabilstockresearch.com/book to get more information. Also, if you enjoy the content, hit that like button and also subscribe. All right, let's start with the market conditions. I've got the sentiment unchanged this week at 43%. Now remember, between 43% and 45% more bulls than bears. We're at 43. There's higher risk in place. There's too much bullishness right now. It's kind of lingering. And this is not a timing indicator, okay? And that's why I don't call these market indicators. I call them market conditions. It's a condition in place, especially these ones at the bottom are ones that we want to focus in as conditions that can tell us kind of what kind of environment we have right now. Now, we're overbought at 84% right now, and we've bounced off this. We got to oversold in April on this drop and now have moved all the way back up. We're back in this range. Again, not a timing tool. It's a condition. We're overbought. We have an overbought condition. We have a little too much bullishness. These two things are the only negatives we have now because the volatility is starting to shift. Both the trend and the momentum is bullish in all the time frames. All right, let's look at these charts though. We've got the daily average true range, and that's this black line. And what is that measuring? That is measuring the size of the bars, okay? If you include gaps. So if you take the gap, any kind of a gap, and you include that in and fill it in, that'll tell you the size of these bars and whether they're growing or not or shrinking, all right? If they're growing, then then this line is going to go up and the risk is a little more elevated, okay? So we get into a period where it starts to climb like that. We know we've got a little bit more risk. Then it starts to drop off and things start to turn back. And ever since we turned around here and the volatility shrunk, the size of these bars shrunk, we've been in a better environment, a less risky environment on the weekly, on the daily chart. All right. On the weekly, we went through, let me just give you a little bit of history so you can see how this played out. So we turned around and increased in volatility pretty dramatically to end 2021 and early 2022. We were clearly showing signs of risk because of how much this had increased. See how the volatility had increased on the weekly. So we knew when we got divergence here to end the year that there was probably going to be some risk and a lot of volatility to follow. We ended up creating a bear market, then turned around, made a bottom. And while we were bottoming, things started to quiet down a little bit and we formed a base. Typically, when you're in a period of distribution, you have wider range bars and wider range swings, and that's a distribution phase. That's when you're topping. When you're bottoming, you're basing, you normally have a quieter environment with smaller bars and smaller swings, and that's what caused this to drop. Now, we were down till the beginning of this year. We've shown a little bit of a jump here as this has moved higher recently. You notice how the moving average is turning up. Now, here's the issue. We are starting to drop down through this moving average. You see how this has dropped down? So it's still considered neutral. It's not positive yet because the moving average is still kind of flat to rising. And that's really more of what I'm focused in on. I want this moving average to actually turn down, but I think we're well on our way. Now, I leave it at neutral because it's very possible after the drop that we had and then we've come back and tested, if this were to pop, if we'd get some volatility on a pullback, let's say we pull back to the 18-week and we do it in a mild, way where it's very orderly, then this will just drop and this will roll over. If we do it in a way where it's violent and we get big bar to the downside, then this is going to pop and it's going to reverse, and it's going to be a little bit more concerning because we'll be breaking the 18-week and shifting somewhat of the trend on the weekly chart while this is rising in volatility. I'm kind of the belief, based on where we are in terms of the time of the year, we're in June. July and August are typically environments where we have lower volatility simply because it's summertime. All right. So you have to kind of take that into account. When this is dropping, it might be dropping just because it's summertime, but still that's telling you that there's not enough strength, or the size of the bars are telling you not to be ready for anything significant, at least not right now. So we could be in that mode starting at this point, but we have to watch and see how we pull back towards the 18-week. If we pull back, we might not even pull back to the 18-week, but we've got a really narrow range bar this week forming. We've got 1 day left, Friday, see how it plays out. And, but if it pulls back in an orderly way, I'm pretty sure we're going to see this dropping down and the moving average dropping down, and both volatilities on the daily and the weekly will be positive again. All right. All right. I want to switch over to the 4 time frames, and I want to start out. Now, here's what I do. I've got a monthly chart in the bottom left, weekly bottom right, daily in the upper right, and hourly in the upper left. All right. Now, the key thing, if you notice what I've done on here, is I have shown 8 to 10 years in the monthly, 2 to 2.5 years on a weekly, 5 to 6 months on a daily, and 15 to 20 days on the hourly. What does that mean? That means that that's what I want to show in each time frame. So on a daily chart, I typically, and what I usually will do is if I'm showing 8 years, then I want to show 2 years. And 5 months and 15 days. That's how I want to have this set up. Now, typically what I have, the way I have it shown is 10 years is the way my standard look is. I've got 10-year monthly. I've got a 2.5-year weekly. I've got a 6-month daily and a 20-day hourly. Those are the time. That's what I want to see. Now, why is that? Because they're all equal. This is 120 bars. This would be 120 bars. If I go with either end, but let's just say I'm doing 10 years, I'm doing 2.5, I'm doing 6 months, and I'm doing 20 days. They're all approximately, not exact, but approximately 120 bars in each time frame. All right, so I'm looking at this and I can count back and say this is pretty close to 120, pretty close to 120. You look at all of them. Now, when I go to the 8 and 2 and 5 and 15, it's 100 bars. It's 100 bars each. Now, again, it's not exact, but it's close. Why do I want to do that? Well, I want to have the same perspective in each time frame. I want everything to look similar because when I look at one time frame, I want it to translate into what I'm seeing on the next time frame, both up and down. I want it to all look like somewhat unified in terms of the look. I don't want to have a scrunched up daily showing 4 years of daily, right? I mean, so if I have a 4-year daily up and I'm trying to compare that to a weekly, it just doesn't make any sense. So I want to have the same perspective in each time frame, and that's how I want that's how I want it to play out. So again, right now I've got the 8, 2, 5, and 15 is how I have this design. Anyway, I wanted to point that out just in case you were wondering how much to show. I notice a lot of times when I'm coaching guys, they try and scrunch up their charts to try and get more, they don't have enough room, or they don't have more, I don't know, they don't have a big enough monitor or something like that. So these are this would be like kind of like the time frames I want to have up in each segment. So in each time frame. So 8 to 10 years, 2.5, 2 to 2.5, 5 to 6, 15 to 20. Have that in that range, and I think you'll be a lot better off in what you're seeing. You're going to start to see the charts. They're going to make a lot more sense. All right, we've got same pattern, a move up to the upside. We had a pause and test of the 5,000 mark or 500 on the SPY, and now we've started to lift off. We're getting a little stretched away, but nothing too dangerous. We have pretty good momentum conditions. There's nothing wrong with the monthly, really. Nothing that screams that there's a big problem. On the weekly chart, let's just zero in on this. On the weekly, we had this kind of harsh pullback that caused overrun. And then we had the pullback. It doesn't show up, but we had a move up and then came back down and then turned right back up. And so that was the reason, or that made up for this little crossover. And now we've been moving higher. It's slowly but surely kind of catching up. We are above the signal line, but we aren't at a new high. But the key thing, and the reason why I have the momentum at positive, is the ADX line itself is well above the 25 line, showing a lot of strength in the trend. And the green DI, which was down under 25 momentarily, came back up, and we've already made another higher high and confirmed this move. And we're back to being in somewhat of an expansion phase again. Now, the bars are shrinking. We're not showing a significant amount of follow through, but enough follow through to keep this so that if we had a pullback, we'd still be in the area of the 18. All right, so let's just say we turned here and we started to pull back. We could easily break the 18 with just a normal pullback. But with a normal pullback, I think we're going to find support or be in the area of the 18. Now, we might not have a normal one. We might have a really violent one. But I'm saying if we have normal, then to me, that's in pretty good shape. I think this is a good enough push with good enough momentum to classify this as positive at this point. All right, let's look at the daily chart. The daily chart took a little bit of time to get going as well. We had this kind of deep pullback with some red DI causing this to pop a little bit. So it took a little bit longer to get things going. But we got the green DI going here with the breakout and confirmed. And then as this moved higher, we've gotten the ADX to confirm. All right, so it's not like we got a false signal. It's just somewhat of a delay. But if you keep an eye on the green DI, it'll really kind of tell you early on in a trend and early on in a reversal of a new trend, green DI is going to give us the signals we want, and then we look for the confirmation using the ADX. So far, so good. Again, really small bars recently, no real signs of distribution to any significant degree, maybe a little bit of volume here, but red DI isn't doing anything. We'd need to see red DI come up and make a higher high while this makes a lower low. Then we'd be heading into a contraction phase. And I think if it happened from this juncture, I do believe we would break the 18-day and probably go through something a little bit more significant. All right. Now, finally, on the hourly, I did want to point this out. So when I see this and I look at this starting to pull back and I'm like, okay, how much risk is there right now of this really violently breaking the 18? Well, I'm going to use the hourly for that to tell me if there's risk on the next higher time frame. So in other words, if I'm looking at a daily chart, I want to look at the momentum and the strength to determine how much risk there is. You know, if we get something going to the downside, how much risk there is in the next higher time frame. This doesn't have, so this had pretty strong momentum. Look at how green caused this blue line to move up, this ADX line. But since we've been consolidating, pulling back and going down, you see how there's been no strength. Red DI has hardly even been above 25, and the blue line, the ADX line, has remained low. All three lines, this actually looks like it's prepping for a new move. Now, it's possible it'll be to the downside, but I would be leaning just based on how everything is playing out in all the time frames. Yeah, it really could go either way because we've gotten a little stretched away on the 18-week and we've gotten a little stretched away from the 18 months. So I can't say for sure. It's very possible we could take out this low ADX condition with a move to the downside. Very possible, but I would need proof. I need to see it happen. Probably want to see some pretty good strength in the volume to tell me that maybe we're going to come back and test this support area, which I would put at 533, 534, something like that. So that's kind of where I am with this right now. Still pretty orderly to the upside. The volatility has dropped. Could just be a summertime situation, but it's still meaningful to me at this point.